Today's company joining the Bitcoin Treasury movement is none other than GameStop. The meme stock icon just raised $1.5 billion and says it's going into Bitcoin. Meanwhile, the Federal Reserve is stepping back from crypto regulation, opening the door for banks. Let's break down what this really means. On April 1st, GameStop disclosed it had raised $1.5 billion through a convertible note offering. In a follow-up SEC filing, the company confirmed the funds would be used to purchase Bitcoin and stablecoins. It's a massive shift for a company better known for short squeezes than sound money. The board signed off on the decision on March 25th. This positions GameStop alongside Strategy, Mara, and a growing list of Bitcoin Treasury companies. But that's not all. On the very same day, the Federal Reserve announced it would withdraw prior guidance that discouraged banks from engaging with crypto. That's right. The Fed is quietly saying, we're not standing in your way anymore. This could be a turning point. So why GameStop? Let's zoom in. GameStop is a legacy brand, with market cap swinging between $4 to $6 billion. Its financials haven't wowed anyone recently, but the company still holds a significant cash position thanks to earlier stock sales. Bill Miller IV, a respected value investor, has just taken a new position in GameStop. He cited its mimetic power, its loyal following, and, interestingly, its strategic adaptability. And he pointed to one man, Ryan Cohen. Cohen has the trust of retail investors and a history of thinking outside the box. So what's the strategy? Let's step back and look at the pattern. Companies embracing Bitcoin tend to fall into three buckets. 1. Hedge against inflation, fiat risk, or central bank policy. 2. Hype, making headlines and driving attention. 3. Long-term allocation, rethinking how capital is stored on balance sheets. For GameStop, it could be all three. Miller called Bitcoin a test of adaptability. He sees this as GameStop aligning with future-facing capital management. We've seen a similar story with Metaplanet in Japan, and of course with MicroStrategy in the US, and there's a macro backdrop to this. Analysts are calling it the triple put, the Trump put. Markets expect political backstops in an election year. The Fed put, balance sheet expansion may return faster than forecast. And the Treasury put, with the U.S. government supporting debt rollovers and corporate liquidity. Together, these reduce perceived downside for companies placing asymmetric bets, like buying Bitcoin. Quick reminder. What is convertible debt? It's a loan. That turns into shares later. So GameStop raised capital without immediate dilution and gets flexibility on how to use it. And what did they choose? Bitcoin. That's a signal. Final take. This may not be about Bitcoin alone. It's about control, about owning the capital narrative, and becoming anti-fragile in uncertain times. Now the Fed is stepping back, and GameStop is stepping in. If you want more company breakdowns, with clear, no-hype, Bitcoin forward analysis, hit subscribe. Drop a comment with the next company you want covered. This is Ledgerline, where Bitcoin meets business.